Okay, this is a live trade. It is 8:50 a.m. Eastern on Wednesday, October 7th, and we're looking at the pound dollar. So this is the pound dollar. Pretty interesting price structure here. This is a 60-minute chart. I want to give you the entry first before I show you the targets. So here is the point and figure, and the entry was at 70, 78, 77, 78. So the entry's at 78 here, and one of the first targets, I've got to be mindful of what I see here on the point and figure versus what I see on the candlesticks or the bar charts. So resistance is up here at 27. So I'm going to trade this from 78 to the first target there at 1.2920. Sorry about that, 1.2920. But it's also possible that it could retest and go up as high as 60 into this little range right here, this little pocket. And very often we're going to notice some of these pockets and how they play out, and they repeat, especially if it's going to remain inside a consolidation like this. So I'll keep an eye on it. Again, the first target is going to be 20. Second target would be 50. But again, if you're hands-on, there's 50. If you're hands-on, you can certainly trade it a little bit further, which would bring us close to about 75 or 80 right in here into this little pocket. So we'll see how far we can take this. Obviously, we know where our stop is. And I will pause this and update it as it hits the targets along the way. Let me go ahead and set in a couple of price targets here. So we've got the first target here at 20. And then the next target here at approximately 50. I'm just going to set it there at 49, maybe 48, just in case it stalls. If that's as high as it goes, I want to make sure that I'm aware of it so I can lock in the profits there if it just doesn't go any further. And then the final target, if it goes, again, if I'm hands-on, you want to make sure that you've got alerts, you're notified, you're ready to go. The final target, if we can trade it further, if it actually does that, would be 80. So I'm going to set it here at about 75. Which is 5 pips before that last and final target. Remember, the entry is at 78, and there is the possibility that it could trade all the way back up here to about the 80 area, or about, let's say, between the 50 and the 80. So we'll see how this plays out. I'm going to pause this and we'll update it again along the way as it continues and unfolds. Alright, so a quick update here. It's been a few hours. You can see this is again the 1 hour bar. And we've followed up with this one. It broke through the 2900 level. So we've got to be paying attention to these support and resistance lines. That's why we're drawing these lines in here. Remember, we talked about this in one of the videos in the course. You want to be drawing lines. And again, don't forget to keep up with some of the lines that you draw in your point and figure. But we do that in a very specific way. So again, we pay attention. We see that it was just a big flush, kind of like a spring almost kind of effect. Now we've got this move here to the upside. We've got a resistance level. When we've broken above this resistance level, we know we're probably going to continue further. Now things are all lining up a lot better into this area, approximately or approaching the 1.2980. So at this point, when it reaches the 20 from the entry, we've picked up approximately 40 points. Again, scaling out is not a bad idea, especially in a situation like this, but we're doing just fine on this one, and I'll continue to update as this one progresses. So we're going to take a quick look at the futures, as I mentioned. It's still on track to continue to move higher. I don't necessarily think it's going to keep some kind of a resistance level right here. You can see that there is a slight resistance, but I don't think it's going to remain here. I think it's going to continue to move higher. So again, we've already locked in the profits here at 20. Remember how we scale out. It's very important in situations like this when we're scaling out. We've only got so much data, sometimes more data as time continues. We might be able to get a follow-up count. But again, when we're trading inside of ranges of consolidation, which you can clearly see on the bar chart or the candlestick chart, you can see we're trading inside of a range of consolidation. So we've got to take that into consideration, and scaling out is always a good idea. So scaling out at the first target, definitely. The second target here at 50, we've already covered this. Again, if you're hands-on and it's blowing right through that level, then just let it continue. If it goes above the 50, then we would watch and look for the pullbacks, and then just continue to move your stop along the way. Final target would be as it approaches 80. It doesn't have to be a precise number. Remember, we're not holding out for the exact number here. Getting in at 78 and taking a take profit level at 80, we're looking at about 100 pips. So there's no point in giving back 50, 60 pips because you're holding out for that final target of 80. Set the alert or price alert 5 to 10 pips before that. Nothing wrong with locking in profits at 70 or 75, something to that effect. If it seems like it's going to stall or stop at this point, moment. So let's take a quick look at the futures. Again, this was that move to the downside. We had the signal, and then it retested, and then you can see how it, on the second candle after the reversal, that was a bullish engulfing candle. Go ahead and open that up. That was a bullish engulfing candle, and that candle right there, just it created just a lot of energy and a lot of momentum. Again, we've locked in profits. There's no way we can give back profits here from 78 to 20. We scale out. This is just sort of a midterm take profit level, again, because we're expecting price to move through that level, and then we're going to watch to see how it trades above the 50. Okay, so this is a follow-up on our pound-dollar trade to the upside with this point and figure example, and I'm going to show you exactly how this turns into another session, another day, another trading opportunity. One of the greatest opportunities that point and figure provides us is the ability to calculate or to sort of predict where price is going. The other thing to take into consideration here is that this is all taking place at or around the London Open, and the start of the London session is very important. So I spent a great deal of time with my coaching students, getting them really familiar and into the habit of paying attention to the first hour of trading for each session. So the two sessions that I primarily trade are the London and the New York session. This trade, at the end of this, paid 87 pips. That's what we earned from the entry. It just took a little bit longer than I expected, but that's okay. That happens. Sometimes it'll move and hit its targets within 3-4 hours. Sometimes it'll do it within 30 minutes. Other times it'll take 8, 9, 10, 12 hours. There's nothing we can do about it. We just have to be watching the waves and noticing the retracements on the way up. So let's go ahead and move things to the side. And you can see where we are currently. I'll talk about this trade here in just a moment. So here in this situation, it ran right up and into that 70 area, didn't hit 80. And we see that here, twice, 69. It tested again at 69. And that is at 1:28 a.m. Pacific time, which is 3:28 a.m. New York time. That's 28 minutes after the start of the London session. So I know that there's going to be in most cases, there's going to be some kind of activity. Sometimes there's reversals prior to. You'll see price move into, let's say, to an area of resistance, right into the open, the first hour of the London session. And then during that first hour of the London session, it'll spend all of its time reversing or going the opposite direction. It's slightly different, but you can calculate this. And remember how we calculate this. So this is why we always go to our futures chart. So this is the pound futures. And here you can see there is the first hour of the London session. It doesn't do anything. That's the 1 o'clock candle. It pops straight up and starts to roll right back down again. That's the candle that moved right up into the 69 level and then pulled back down. There was a retest, as I showed you here. There was a retest indicating that it was probably topping out. But the real key for me is looking at my futures chart here and then identifying what's actually taking place, and I'm watching volume levels. We're counting the waves. That's the second component to this trading system, is counting the waves and watching volume. That's where I spend a great deal of time with my coaching students as they coordinate all of this information with the price structure, let's say on a bar chart or a candlestick chart, and then looking for the entry with the point and figure. So there's 3 components to the trading system, and it works every time if you do it correctly. So when I talk about drawing trend lines or support and resistance lines, before the London Open, here we had a top. I drew a trend line. I removed it so that way I could show you in this example what I would do here and why this helps me identify a turning point, at least from a technical point of view. So there's the London Open right there, that red candle. There's the first hour afterwards. So this is the 12 o'clock candle. Again, California time, that's when the London market opens. There's the 1 o'clock candle. It moves up, pulls back down, closes below this little resistance level here, right here. This is a key indicator right now at this point as far as where the close is in relation to this resistance point. And then it starts to slide right back down with more volume. You can see how volume picks right back up again on that 2 o'clock candle. And that was the move to the downside. but we were already out of the trade. So I could see that it was reaching a turning point here. I could see that it wasn't necessarily going to close above that resistance. Volume was a little more, but again, there was no effort, there was no reward for the amount of effort pushing through the first hour of the London Open. Then it provides another opportunity. So we have a support low. We know that there's a turning point based on what we were just looking at on the futures chart. We know that volume picked back up to the downside. You can see volume here moving back in. There's a lot more participation. It's going to be a forceful move, and that gave me an entry here just below that support level at 2938, 1.2938. Based on the data, the first target was approximately the 00. So far, price has moved through the 00. The next target, again, if you're hands-on, I always say that if you're hands-on, meaning that, let's say it's approaching the 00. You set a price alert 5 pips before. If you're at your computer, you can remove the take profit level, let it move through support. You can, at that point, you've already reached your target. So you have a few options. You can take the remaining 5 or 6 pips that it gives you, watch the pullback, and in most cases, again, we're trading inside of this range right here now. So is it likely to hit 80? It may not take out the low. It's possible. So we could probably hold on to the trade a little bit longer, scaling out, locking in profits here at the 00. So you've already earned approximately 36 pips. That's what we've earned so far. We've earned 36 pips on this move to the downside. Scaling out of the trade, and then we're watching for a signal or a clue that this is the low, and if it's going to turn around, and we would close out the trade at either break even or whatever we could pick up from the remaining half, 38 to let's say 20, something to that effect. So we can't lose at this point. We've already picked up 36 pips. We've already banked that money, and we're setting the open half, the remaining half of our position at a break-even stop. If it continues back down and it takes out the low here at 91, we would trade it to, or as close as we could get it to, the 80, paying attention again to some of these clues to see if it's topping out or bottoming out, and then we would revert back to our futures chart to see if there's another key level of support and if there's the possibility of a bounce right back up towards the open price for the London session. That's also a possibility. Now, I'm not saying it's going to go back up to the opening price at the London session. I'm just saying that it may travel in this range right here as opposed to the previous range that we were trading yesterday. That's what I'm getting at. So these ranges are getting tighter and tighter. We've got to be careful. There's going to be some kind of bigger break eventually. But at this point, we're able to safely trade inside of this trading range, earning 87 pips to the upside, 36 pips to the downside so far. That's what we've already banked and locked in. So if it continues to drop, we could squeeze out, let's say, another 20 pips on the second half of that position, and we would be done with the trade if it actually hits 80. Again, there are ways where we can calculate and identify if it's not going to hit 80, and we should lock in whatever profits it is giving us, just like we did up here where price hit 69 but didn't hit 80.